Hey, what's up, everybody? Welcome to episode number 168 here on season 1. And today we are getting into ETFs or mutual funds. What's the difference? Anyways, this question comes from Hector Ortiz. And he asks or says, "Hello, coach. I just wanted to know what is the difference between ETF and mutual fund?" And I think that's a great question because when you look at it at face value, there's a lot of similarities. And let's go ahead and get into it. I know you guys are like, wow, he brought in the green today. No, it's Kel, okay? It's Kel. It's not green. Anyways, wow, really? So like I just said, both are very similar, but there are some distinct differences in ETFs versus mutual funds. They're both similar in the fact that they're both baskets of stocks. So an ETF is going to be a basket of stocks or a basket of companies, and it could be ranging anywhere from 100 to about 5,000 companies, and anything less than that and anything more than that too. Mutual funds are going to be the same thing. They're going to be baskets of stocks as well. So that at face value, yes, they're both kind of the same. However, when you start digging more into it, you start to see a lot of differences. ETFs trade similar to stocks. They can be sold and bought during the open window of the New York Stock Exchange or the NASDAQ. So the hours of open trading is when the you can buy and sell ETFs. Mutual funds, however, are bought and sold after the market closes. So when the market closes, then you can buy and sell the mutual funds for a short window of time, and then after that you can no longer buy and sell those mutual funds until the next day close of the market. So that's one thing that's different between both of them. ETFs also have lower operating fees, so they're typically, and from what I've seen, they're about 1% less than what a mutual fund is. So if, like, for instance, like Delicious Dividends or for instance like the S&P 500 Vanguard fund ETF, say it's like a 0.5 operating fee. With a mutual fund, you're looking at around 1.5-ish. So you're looking at basically paying about an extra percentage for the mutual fund. And this is because mutual funds are going to be more actively managed, where ETFs will be more passively managed. With mutual funds, also you usually have to pay a minimum like entry fee. So usually, from what I've seen, is they're around $1,000 minimum investment, where ETFs, you basically have to afford the per stock price or the ETF price, which some ETFs are as low as like $10, and even I've seen lower than that. But for like stronger ones, $10 and all, ranging all the way up to like $300, $400. So the nice thing about ETFs is that as long as you have then enough money to buy that stock or ETF, you don't have to have a minimum. Like, there's no minimum basically to make an investment. ETFs are also going to be more tax efficient. And from my understanding of this idea is that ETFs, because you buy a stock, so you buy an ETF on the stock exchange, when you sell that stock ETF, so say you bought it at $45 and it went up to $50 and then you sell it, yeah, you made $5 off that, and so you have to pay capital gains tax on that of the $5 that you made. Whereas a mutual fund, because they're buying and selling and they're managing your account, whenever they let go of a company, so they get rid of a company, say they made a profit on that, you as the mutual fund account holder, you have to pay taxes on the profit that they made off that. Where with an ETF, if they let go of a company, add a new company, you don't have to pay for that because you never actually let go of that stock. And so you never, in essence, made money off that until you let go of that and you sell it at a profit. That's my understanding of the tax efficiency side of it. And also, ETFs don't have a sales load or basically an upfront cost for buying a ETF. So with a mutual fund, typically when you invest $1,000, they're going to take a flat rate or whatever right off the top of that and say this is me that's throwing numbers out there. We're going to be like, okay, well, you invested $1,000, we're going to take 100 of that as the sales load, basically. ETFs don't have that because they're traded on the New York Stock Exchange and NASDAQ, so you just buy in, boom, and that's what the price that you bought it at. On a mutual fund, you're going to pay typically you'll pay a sales load, so you invest $1,000, maybe they'll take $50, $20. I don't know what the exact rate is on that, but typically they will take some lump sum of money. So basically, those are the differences, those are the similarities. The nice thing with ETFs is, like I said, they are passively managed, and they do typically mimic a index. So like the S&P 500, the Dow Jones Industrial Average, the tech industries or whatever it may be. Mutual funds are going to be more actively managed, so you might get a actively managed mutual fund where a guy is an actual like swing trader in there, or a person where they're like, we trade these or we buy these stocks or whatever, but they're going to be able to buy and sell, and they're going to actively manage that account. So say a like GE drops that hardcore, then they're going to be like, well, we don't want GE in our S&P 500 anymore because it's not doing that good, so we think it's going to go out. So we're going to sell that and pull in another one that we think is going to get added, which they can do that. An ETF is going to be like, well, we only track those ETFs, and so passively managed, like GE wasn't dropped from the S&P 500 or whatever, so we're going to keep it in there until it actually gets dropped or whatever it may be, and then boom, once they do that, then they'll put in the other one. So that's the difference. Let's go ahead, and I hope that explains it. Let's go ahead and get into the question of the day, which is, how do I overcome my shyness and be like a smart guy? I don't necessarily know if that's what you want to be. Shy, I think smart guys might be typically shy from my experience. But how would I overcome that? I would just continue to put myself out there in those situations where I have to be the smart guy, or I don't know, where I would have to be forced to not be shy. And honestly, it sounds like you might be more introverted. So what I would do is, if you're going to a party or that kind of thing, I would make sure that you get a lot of rest that day and have a lot of me time. And so when you go to a party, you have a lot of energy to give out, because once you get home from that party, you're going to be tired or whatever. And so then go to sleep and repeat. And whenever you're going to be out with your friends, make sure that you have a period of time to rest and relax before you go out with your friends, so that you have energy to give, versus if you were to expend all your energy that day, then you hang out with them and you don't have anything to give, and so you're just exhausted and tired and don't really just want to be shy. So that's my opinion on that. Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, coaching, post those questions down below, and I will try my best to get them on the next episode. And as always, don't forget to subscribe up here and check out, I don't know, my worst investment on Stash, and then check out this other video right here. And as always, thank you for watching. I really appreciate it.